If I traded it all, if I gave it all.
Welcome back, everyone. My next guest, David Fisher. He is the CEO of Landmark Capital. David has been coming on my show for at least 2 years now. At least, I think. I can't even remember now. David, you are all about educating the public. We're live on Facebook, so you can say hi to everybody out there. Tell everybody a little bit about yourself, and because it's been a while. You took the summer off a little bit. So tell everybody about yourself and what you do.
Well, I've been in the precious metal industry for 25 years now, and I help people understand the economics, what is happening in the marketplace, not just in gold and silver, but stocks, and also what the Fed is doing. I've been on national radio quite a bit. In fact, I was on national radio just an hour ago for an hour.
You're tired.
And I am a little bit tired.
Yeah.
My voice, I've been actually talking a lot. The company's business has increased. In the last 2.5 weeks, we've done more business than the previous 2.5 months. People are waking up. We have a major problem coming up. We'll talk about that on your program today. But, we're accredited members with the Better Business Bureau. We're A+ rating. We have no complaints. In my industry, we have very similar things, and we have all those accolades. So I'm here to help people be entrusted with their money and what to do with it. Diversification is always a really important plan, especially with what we've seen happen in the last decade, in 2008. And so gold plays a vital role in one person's portfolio. I talk for a living. Yeah, I can do that.
I know. I haven't said. I laughed this. My loss in my last one. Okay, but I want you to tell them just real quickly, because now we're live on Facebook with this now too, and it's been a while. So, how they can do that.
Well, they can roll over their 401k, their IRA, and buy physical gold and silver and take possession of that in their retirement account, their IRA, without a tax liability. They can, you heard me right. Did he say they're probably thinking, did he say what he really said? Yes. You can take physical possession of your gold and silver within your IRA without a tax liability. We've helped lots of people who have their gold and silver stored in a national depository like Delaware Depository Servicing Company or Brinks out of Utah. And we've helped people get control over their money, because nobody's going to take care of your money better than you, and that's our philosophy.
Well, I love the idea of taking care of and having possession of your money. I don't like the idea of having, you don't even know if it's really there.
Well, there's that problem, and that's kind of the wondering in the back of your mind, because all people that buy metals and it's in an IRA and it's stored in a depository, it's called called commingle. There's no segregation accounts unless you want to pay over $1,000 for that. And so we show with people how you can actually get control of your money and actually have more quality investments in your portfolio when you take possession of it, and it's not held in a depository. You don't wonder anymore. It's there in your own address.
And it's also affordable to do. It's not expensive at all.
There's lots of companies out there. There's probably around 9,000 gold companies, and when I started years ago, there's around 2,500 to 3,000. Next year, there'll probably be 15,000. So it's an ever-growing number, but not many people know how you can do this. And the company that I use, a lawyer here in Phoenix, we are on a national level, so I have clients in just about every state. And you can roll over your 401k IRA, and it's cost-effective. $385 one-time fee for the lawyer preparation, compared to what I've done my studying, $995 to $1995 for all the other lawyers that charge the whole legal fee side of it. So it's much more cost-effective. $350 if you're in Arizona.
Now, we also have your white paper that we're going to give to everyone, so we're going to let everyone call in for this. The white paper is all about the
bail-in.
And we've been talking about it now, and it seems like it's getting closer and closer to this could possibly happen. So listen up, everyone. If you're interested in this, you can call in at 602-277-5369. Toll free, it's 1-866-536-1100. You're going to get his white paper on that. And again, we're going to just kind of go ahead and talk here about some of the different things that are happening that you want to talk about today. You can check him out on his website, which is Landmark beargold.com. You can also call them. They do free consultations. They're A+ rated with the Better Business Bureau. The number to call them is 602-287-9200. Okay, what's going on that we got to talk about right away first? Too many words for me. Go ahead.
Well, the Fed has been talking this year. They've raised interest rates twice. They're also going to talk this week coming up. They talked here a couple weeks ago. And the Fed is sending a mixed signal, Carol. They're saying we're going to raise rates, and then when they did it, both times the market and stocks came down over 200 and almost 300 points. Gold went up. So what they're saying and what they need to do, called getting back to normalized rates. What's a normal rate? We're at 1% now. We're at a quarter of a point at the all-time low, and 20% when we had inflation in the 70s, double-digit interest rates. The Fed lending rate was 20%. So normal is, on a technical level, 5.33%. The Fed wants to get to 3.5 to 4.5% in the next 5 years. To get there, they got to raise rates. Well, when the Fed raises rates, and it's now been shown, the market doesn't like that because it costs businesses more money because they have a line of credit, borrowing costs are higher, everything gets transferred off to the consumer buys less, doesn't support the economy because of the
And then what happens? We have what happened before.
Exactly.
Wow.
So that's why the Fed is between a rock and a hard place, because they got to get to normal rates. Why? Because these are artificial rates. The Fed just created a bubble of an artificial rate at a quarter of a point. And during that artificial rate, they bought around $4.5 trillion of assets. Well, they bought $4 trillion to be exact, because they had about $500 billion already.
Wow, I have to worry about that $1/2 trillion. $1 trillion a lot.
Yeah, $1 trillion is a lot.
$1 million's a lot to me.
They're trying to get rid of $4 trillion.
Wow.
It's called their balance sheet.
That's amazing.
So in getting rid of it, they're selling an asset called Treasury bills. What's a Treasury bill? It's the instrument, that financial piece of paper, electronically, that's created by the Treasury when we overspend as a country. We have to create a debt instrument. That's a Treasury. It gets sold on auction in Wall Street. Foreign investors buy it. Foreign investors have been backing away from buying our treasuries, so the Fed has stepped up. In the last 8 years, they're the number one buyer now of the treasuries. The number one buyer, the Federal Reserve, is now announcing that they're selling treasuries
To us.
back to the government.
Okay.
So, but the government needs money, so the number one buyer selling treasuries, we need people to buy them, not sell them, because last December was the last time the Treasury reported that we had the biggest sell-off in 1 month history. It's because it's been escalating. That was $80.3 billion. So the Federal Reserve is now among the same groups as central banks. They're selling the U.S. dollar. They're selling treasuries. Now, we're not going to have a dollar collapse. And not like most gold companies that say the dollar's going to become worthless. We are having the financial backbone of our country, somebody buying treasuries and supporting our overspending of our country, now being challenged. And that's what the Fed is in between a rock and a hard place. They have to unravel their balance sheet. Why? Because when you raise interest rate, it gives them a loss in their balance sheet. They're losing money. No bank likes to lose money, and neither does the Federal Reserve. So this is why they're having to sell it, because they're raising interest rates. And we have to find a new buyer. Well, the new buyer is probably going to be the American people.
That's what I was saying. Oh, my God.
That's where this bail-in comes in.
Will we have that choice, or will they make us do it?
Well, that's the bail-in. If they flip the switch, because they passed a law called the Dodd-Frank Act, and they created an entity called the Consumer Financial Protection Bureau, which is the mechanism that would actually seize people's money. And by the way, this has happened in 9 countries already.
Right.
In the last 5 years. It's a real thing. We've created the blueprint. It's even on our government websites. I have a lot of the data put in our literature. They can Google it, and you'll see where I found it. I found it on the FDIC website. I found it on the International Monetary website. I found it on Wall Street Journal websites, Bloomberg News. Lots of mainstream news are saying this is the plan now that America is moving and forced into moving towards. What could trigger this is September 29th. We have a thing coming up called the debt ceiling. We've talked a little bit before in the spring on your program. And just to back up for a second, what the debt ceiling is, it's not us spending more money. It's saying how we can spend, and when we spend that much money, we can't spend any more. So that's why the debt ceiling was put in place way back in 1915. So it's a thing to limit Congress from overspending.
But it's a ceiling. They're going to raise it?
Well, if they don't, we're going to have a government shutdown and a default for the first time, according to what Steve Mnuchin, the Secretary of Treasury, just said 2 weeks ago. In March 16th, they came to that ceiling at $19.918 trillion. Call it $20 trillion, so close to 20. We reached that level, so the government couldn't, quote, spend anymore. So this is what they did. They did a thing called extraordinary measures. In other words, it's a fancy term for saying where we're going to get the money to pay the bills. And the Secretary of Treasury says, I know, I'm going to go into the government accounts. Social Security, Medicare, disability funds. We're going to rob Peter to pay Paul, and we'll talk more about that after the break.
The number to call them direct, they do free consultations, is 602-287-9200. The website is landmarkgold.com. Call in here, get his white paper on all of this information, 602-277-5369. We're talking with David Fisher. He's the CEO of Landmark Capital. We've been talking a little bit about the debt ceiling and how there really isn't a ceiling. I should say it that way. I'm saying it that way anyway.
You know,
is that fun? Is that okay?
Yeah, absolutely.
Because it's true.
We should have a ceiling, but they keep breaking through it. And that's not a good term. That's a bad term.
Right.
You know, and just to put it in comparison, check this out. In 1791, the national debt was $75 million. That's the same we pay every day in interest now.
Oh, my gosh. Now, when you say it like that,
think about that.
That's amazing.
The whole national debt, what we pay in interest is now every day.
I can't imagine.
Since 1938, the national debt has risen 8.3% every year, up until 2001. This will tell you why it's escalated. In 2001, every 8 years, it's almost doubled.
So
it was $5.6 trillion in 2001. Bush was in office. Obama inherited, and he took it to $10.9 trillion.
So now...
And then he took it to $18 trillion.
Okay.
We're at now almost $20 trillion. They're projecting it's going to be $30 trillion if Trump doesn't do anything. And if he passes the health care bill and the tax bill together, which they haven't got done, it's going to be $40 trillion, they're saying, conservatively, the Congressional Budget Office. Our debt is not under control, not even close to being. We're not paying attention to our debt. We're blowing through the debt ceiling. But this time, we have an administration that wants to shake things up, change it. And those ideas sometimes don't work with how Congress operates. I mean, they're really slow to change. Last time we had a budget and a debt ceiling happening at the same time was 2011. We had a Democratic president, President Obama. A House and the Senate was Democratic. They all got along, and they thought the same way and voted the same way, and they passed the debt ceiling and the budget in September, simultaneously within a day of each other. But the problem is with the budget, Carol, we were overspending in this budget that they passed $660 billion a year. Right now, we're overspending $780 billion as of the month of March. Okay, so we're overspending more compared to our budget now than we were when Obama passed the last budget. In 2011, when they did that, we got a credit downgrade for the second time in our country's history. If you remember, the Time magazine had a black eye of President Washington on the front cover. Mm-hmm. This time, they are passing the debt ceiling and the budget at the same time. Usually that does not happen. This time, Secretary of Treasury Steve Mnuchin met behind closed doors with Mitch McConnell and Chuck Schumer, Republican Democrat party leaders. They couldn't find a common ground, Carol, to raising the debt ceiling. The leaders couldn't. If the leaders can't do it, the parties can't. Then he announced publicly, saying he fears, Steve Mnuchin is saying this just a week and a half ago, that this time they will not be able to raise the debt ceiling in time. Congress is on break. Summer break. They're coming back the first week in September. Let's put this into perspective. They only have 12 business days, 12 calendar days to get a budget passed and a debt ceiling raised. That is almost an impossible feat figuring with what is going on in Congress. I mean, they couldn't agree on repeal and replace Obamacare, and the Democrats know it's not working. It's bankrupt. The Republicans know it's not working, and they both agree it's not working, but they couldn't come to a middle-of-the-road solution. Both know that the debt is an issue, but we don't have a working Congress anymore. And 12 days is not enough time to get those two crucial things passed simultaneously, and this is why Steve Mnuchin says, I think, unfortunately, this time we might have a default. Economists came out after he said this and said, if we have a default, who knows what's going to happen, but we're going to speculate. Interest rates are going to soar. I hate even saying that. I'm not saying that. Economists are saying interest rates are going to go up quite a bit fairly rapidly. Alan Greenspan said that also recently, 2 weeks ago in Bloomberg News. They're also saying the stock market would correct, and I'm not a chicken little sky is falling, but a lot of economists, and I've been on your program, 20-some to 30-some economists, hedge fund managers, people who are very wise, smart investors who love stocks are saying something's going to give in the next 2 years. Even Neil Kashkari, the current Fed Minneapolis president, said we will have a crisis, another one of magnitude, but this time, quote, the taxpayer is going to be on the hook for the biggest bailout of banks. That's a bail-in. And he says there's a 70% chance this will happen. Jim Rogers, the guy who wears that funny bow tie, that colorful one, he's 74 years old, loves stocks. He said 3 months ago, we're going to have the biggest downfall in the stock market in the history of my life. It's going to be a crisis beyond what Lehman Brothers and Bear Stearns created. This is going to go globally, and it's going to come from some place we do not know. This is why you roll over your 401k, you diversify, right? Because if you put all your money in stocks, you're susceptible to this bail-in.
And you're not here to scare anybody.
No.
This is not what that's about. This is about the education. You're doing the work for the people. I mean, you really, that's what you do. You go on, I don't know how many different websites. You're on all sorts of different radio shows, and you're soon one day you're going to be on television, I think. But really, it's all about you just want to educate them. Be aware of what could happen, but why wouldn't anyone, no matter what, still want to take control of their own money?
Exactly. You know, the 30th richest man in the world, Ray Diallo, who runs a big hedge fund, and he said a lot of things about the stock market. He said, get ready, it's going to be a really bad pullback. Just less than 3 days ago, he says it's imperative now that you have 5 to 10% of your money in gold. He's not a gold guy.
And why? But I think that everybody should have their money diversified. Why would they want to put all their eggs in one basket?
Because they're taught by their financial planner and their stockbroker to keep 100% of their money under management with that stockbroker or financial planner in stocks or paper assets. That's what the world teaches them. And so they don't know any different except from experience when they saw it took 5 to 6 years to recover from 2008. And gold went up 72% in the first year and then went on a multi-year run. So we're going to have another stock market correction. It just matters when. We're long overdue for it, and how deep it will go. But it will correct, and historically, we'll have gold move. Right now, stocks are up about 10%. The Dow. 9.9 to be exact as of yesterday's market close. Gold is up 10.2% as of yesterday's market close. So here we have a bull market in gold and stocks, and what I said in January, we're going to have a bull market in stocks and gold simultaneously this year, and we are here. The second part of the half of the year moves more in gold than the first half. 37 out of 41 years. Check me out. 37 out of 41 years, gold moves more in the last 6 months than the first 6 months. Because September and October are the two biggest months gold moves up. And October is the worst month for stock. So get ready. diversify, because I don't know what's going to happen. Nobody knows that. But you never get hurt being diversified. If they do this bail-in, this happens on September 29th. I don't think it will. I hope it doesn't. I love our country. But if they can't get it together, that is what will eventually happen within a few days or a week after this. They will have to pull money from somewhere. And that's where it comes on the back of the citizens.
Now, you call him direct. They do free consultations, A+ rated with the Better Business Bureau. Their number direct, 602-287-9200. It's landmarkgold.com. Call in. You can call there and get this white paper. You can also call here, 602-277-5369. But call in and get this information. It's all in there. And
Absolutely.
okay, so I know we have a couple minutes. What do you want to go ahead and say? Otherwise,
We have a thing called the financial blueprint.
that's what I.
You wouldn't dare build your house without a blueprint. Neither should you invest care without a plan. And this is an interactive conversation. I brought a note that I just got in the mail 3 days ago. Let's see, what's today? Tuesday, last Friday, from an investor that heard me on a national radio program. He's from North Carolina. His name is Tim. And he says this: David, thanks for taking the time with me. I have not had anyone break it down in terms where I understand like you have done. And also thanks for your heart for the Lord. So Tim is a pretty clear example of what a lot of people go through. I clearly helped him understand what his choices were. And I'm just going to say, he wasn't working with a lot of money, only $3,000. So we have a saying, it's not how much you have, it's what you do with what you have. And so we work with people who have $300,000, $30,000, and $1 million. It doesn't matter what level. We're here to help you and learn the market so that you can properly be diversified and pick the area that will help you get involved in.
Get the information from David. The number to call him is area code 602-287-9200. The website is landmarkgold.com. They do free consultations. Take control of your money and get the information. That's what this is all about. Again, that number is 602-287-9200. It's landmarkgold.com.